Hello there, everybody. A very, very good afternoon to you all, and welcome to a brand new week in the markets. Welcome to the final week of 2024, and I hope everyone is doing well and is enjoying their time with their friends and family during this holiday season for many. And it's good to see you all coming to join my live streaming. Hope everyone has had a good trading week. We enjoyed last week, very much so, because of the volatility that we did get. And I'm looking forward to what's going to be a different week this week, of course. And I know some people can. I even meet someone who says, "Oh, I don't trade over the Christmas period," or some people say, "I do trade over the Christmas period." You know, you can do both. You do get some trading opportunities, and I'll try and break down for you where those trading opportunities are likely to come from today or this week, and give you an update on what the state of the markets will be heading into the Christmas week, should we say. And it's good to see. Hello to you, Bobby, on the YouTube channel. It's good to see you, and thank you very much for joining today. We're going to have a breakdown, of course, on a Monday of our week ahead trade ideas and any potential moves that I think may be worth looking at this week. And we'll keep the streams fairly light this week, of course, because there isn't as much to go over as a typical week in the markets. We shall do that. Right then. Just to let you know, I will be streaming tomorrow, and I won't be streaming on Wednesday or Thursday, but I'll be streaming on Friday. So Monday, today, Tuesday, and Friday. So 3 live streams this week for you, 3 live trading sessions. Okay, right. Let's have a quick look then at our lighter economic calendar for the week. So if I just head over to our economic calendar over at Taurex. As you can see, I filtered this to high impact news, and there's definitely less than what we'd normally expect. We've got GDP out today. We had GDP out today in the UK, which was slightly lower than what we was expecting. 0.1% was the previous and the forecast, but that coming at a flat 0%, as you can see down here. We also had the year-on-year figure, of course. 1% was the predicted figure, and actually we got 0.9%. So didn't end the year too positively from a UK economic growth point of view. And as a result, if we head over to the charts, as you can see, if I open up the pound, little bit of a sell-off against the dollar, up against the Japanese yen, and the Swiss franc is being sold into as well. But really, just a slight negative reaction off the back of that news, as you can see on our GBP pairs. So maybe that's potentially a good market to try and trade today. I was just trying to see if we can get. Because we have to manage our expectations, of course, with it being the Christmas period and what we can expect. So I'm not personally going to be trading that, but we could see a continuation in the grind higher up in pound versus the Swiss franc, maybe up towards that 1.128 level would be an area that I'd look to try and trade that up to on maybe the shorter time frames. If we head into that's it for today, to be honest, in terms of high impact news. Tomorrow, overnight, we've got the RBA meeting minutes. Again, okay, not anything we need to worry or stress about too much, especially if you're someone who finds economic data or economics a bit daunting. This is a good week for you because there's not too much going on. We've also got the Bank of Japan Governor Ueda, who's going to be speaking at midnight on Christmas Day, and then the markets are shut pretty much across the board on Wednesday and Thursday. So just be careful with your trading this week, and we'll talk a little bit about what I mean by be careful in just a second. We've also got some on Thursday, on Boxing Day, and we've got the Japan inflation print as well. So maybe getting some moves in the Japanese yen. And in the Discord channel last week, I did post a trade idea on the USD versus the Japanese yen. With this in mind, because when it comes to Forex this week, my expectations are for lower participation. Thin markets is the sort of order of the week. The main thing really that we want to be focusing on this week, and it's for those of you who have been with me and maybe you're watching on catch up, you maybe have seen my stream last Christmas. We sort of focus really in this week, in that final week of the year, is this sort of Santa Claus rally theory, which gets chucked around quite a lot. And in really simple terms, what the Santa Claus rally is, and that's going to be my main thesis for this week, is that in really simple terms, it's a tendency for the S&P 500 or the US stock market to rise during that Christmas and January period. So this week, basically, and heading into the last couple of days, the first few days of next week as well. From now to the 1st of January, I was reading this article earlier, so I wanted to show you it. This is basically what we're expecting, or what the Santa Claus rally is. Go away. Sorry, just getting rid of this. Generally, the Santa Claus rally refers to the stock market's history of rising over the last 5 trading days of the year and the first 2 market trading days of the new year. So about a 7-day period. There's some stats which back it up. So the pattern since 1950. This week that I'm talking about, the stock market has increased at an average of 1.3%. Additionally, the market has gained during those days in 34 of the previous 45 years of more than 75% of the time from 1950 to now. The stock market has risen during that time. I have some question marks on on whether this is actually a thing or whether it's people clutching at straws and trying to get some good trades for the remainder of the year, but it typically does happen, more often than not. So when it comes to sort of what we're expecting for trades this week, if I go onto the S&P 500 chart, indices, I'm going to be this week studying whether this is true or not. So if I'm on the daily time frame now, you can see actually what we've got from Friday into Monday is a bit of a fair value gap, and it's been filled. We're actually down at the moment today, but we'll see how that goes throughout this week. So I'm going to be, if I'm looking for trade ideas for today, really or this week, what I'm looking for is the continuation of this buy the dip rally in the S&P 500. That's sort of like my main trading idea for the week. So as you can see, because of what happened during the FOMC decision, we had a sell-off in the stock market where the Federal Reserve was more hawkish. But in my opinion, there wasn't enough, or there isn't enough evidence to really to build a bear case for this stock market. And the reason that I say that is, yes, there's a new concern over inflation, but generally speaking, inflation is basing out, falling slightly down. It's creeping down towards the Federal Reserve's target, which is great. And also rates are still at 4.5% or whatever. And therefore, and the economic data has been strong. So I do think there will be some cuts next year, as long as inflation doesn't rise too much or doesn't rise from here. And the economic data has been strong. So overall, what we've got, and I don't say this often, is we have got sort of a soft landing scenario for the Fed. And I think that with it being the Christmas week, there isn't anything else out. I think we can safely say that, yeah, I think we've got good ingredients right now for that Santa Claus rally this week. So if I drop, and unfortunately during this week you will have to sort of drop down the time frames. If we look here at the S&P 500 from Friday to Monday's open, we have an FVG. And you can see that FVG has now been filled, and we've seen a little bit of reaction. So my trade idea for today, and the main one really for this week, just as a bit of an experiment, is I'm going to place a buy in the S&P 500. Very minimal stakes. I'm going to sort of leave my take profit undefined. Like when I say undefined, I mean I'm not going to have a particular take profit in mind. I'm just going to see how this goes. So it's to see if this year we do or do not get a Santa Claus rally. So we filled that fair value gap, and there actually is some credible technical analysis here which can support it, with the fact that we filled the fair value gap, we've had a reaction from it as well, and we're sort of catching this trade around the 50% of that fair value gap as well. And so that's the one really that I'm looking for this week. If I delete that. I'm looking for something like this. Okay? And I'm going to post this one right now in our Discord channel. If I go to our Discord, I'll post it in there, show you our Discord channel as well. Here I am in my trade ideas section. And this is my Santa Claus rally trade for this week. Santa Claus. S&P 500 trade idea. This is from the stream. And can we get some... there we go, look at that. Let's see how we go. A little bit of an experiment for this week, and we'll see if we do manage to get that trade. Anyone on the YouTube channel, Bobby, or anyone who's there right now, do you have any questions about this week? Let me know, and I'll answer them for you. I'll be giving people some advice on how to tackle this week as well, with it being, close on Wednesday. What you typically get is what's called thin markets. And thin markets are basically where there's a lack of a lower participation rate, because obviously people are shutting off their trades potentially for the year, and you get like some sideways price action, and you get a little bit of a grind, and it looks a little bit like that, and it can be quite tough. But then all it takes, because the markets are thin in volume, all it takes is one trade of a significant portion or significant value, and what you can get is a random spike higher or even lower in the market that you're looking at, in any of the markets. And then once that spike happens, we sort of sometimes see it rotate back into the middle. So for this week, be very, very careful. And if you do manage to get on the right side of a thin volatility spike in one of your markets, think about, really trying to think about taking profit off the table at that point, because your expectations for this week should be lower in terms of, expansive market moves. Okay. That's the main thing I wanted to say. Pound yen, WTI and gold for this week. Let's have a look at them. Red list. I've got the pound yen on there. You can see what I just showed you is happening already on the pound versus the Japanese yen. If you look at this, look at the volume we had last week, or the candles last week, and as we've approached and as we've come into this week, what we've got is literally pretty much what I've just drawn. Yeah, so it can be a bit messy. If I turn on my Smart Money Concepts indicator, that's interesting. We've actually got a fair value gap here. Wow, that would have been a beautiful trade. Look at that gap. Tested to the pip. Surged higher as a result of that. So, with that in mind, what I'm looking for probably, if I'm going to trade the pound versus the Japanese yen today and tomorrow, just a move maybe back down in towards this imbalance area, 196.5, and look to trade it higher. What would be great is if we do manage to get a break above 197. If we get a break above there, then we can sort of wait for a pullback and sort of a break and retest trade potentially, and continue that momentum higher. So if I break down to the 4-hour time frame as well, yeah, I would say that overall, Bobby, that we can say that we're bullish here. There's been a nice spike higher last week. We've come down pretty much 4-hour. Right into that 61.8% of that move last week, and in a reaction as well from the 50% after that FVG. This looks to me like a potentially good trade to try and target 199. If we get it this week, great. If we don't, it'll probably be feeding into next year. Gold. Okay, right, let's have a look. So I've just removed all my drawings on gold. If I'm being honest, Bobby, what I think we might get on gold is a rotation back down, a rotation back up towards this area, this consolidation area. You can see how we, like I said, thin markets, Christmas period, what you get, spike in volatility, rotate back down towards the middle, spike lower, rotate back up. So maybe what we'd look for is a move. We're currently at 2617. I'd be looking for this week a move up to 2650. A stronger dollar might pressure this. If we do get a stronger dollar and the dollar ends the year really, really strong, then we're probably going to see a continuation in the grind and maybe even a move down to 2600. But any slight release in the dollar, and I think we could see gold sort of buy or trade its way back up to this 2650 area. So that'll be the way that I'll tackle gold this week. But again, that market's going to be shut on Wednesday, so be careful trading that. And on oil, because we have got crude oil inventories out on Thursday, so we could get some movement in oil. You can see that, well, again, it's about trying to play the range, right? So bottom of the range is here, top of the range is up here. We're sitting roughly in the middle of it now, Bobby. If we don't move any further, we see a move down towards the bottom of the range, try and trade it up to the back to the middle. Or if we get a spike higher in oil and we come up to these areas, look for a liquidity grab and again, try and trade it back down towards the middle. So at the moment, we're in the middle of that range. So we're not really in an area of interest, in my opinion. However, I would like to see a spike in volatility in this market, either up to the top of this range or to the bottom of this range, and then we can maybe try and trade it back into the middle towards that 69 area. That's sort of where we are right now. Okay, I think that just about covers it. You know, there is the US dollar, which is continuing its grind higher. As you can see, bit of a sell-off yet last week. I imagine what we might see is, you know, a move up towards the top. We might see a bit of this for a bit. But don't panic. You know, this is typical of this time. And what I wanted to do this week and today is to manage your expectations of what to expect. So my favourite, if you're going to be active in the markets this week, for me personally, my favourite sort of areas to look at are that Santa Claus rally potential, because it's got the ingredients for it. We can see that we had some buying late last week. You can see that there was an initial dip in the market as well. So it's not like we're trying to buy this at all-time highs. So there is potential for that Santa Claus rally this year, and the ingredients are there. So we'll see if we get that. Forex, I'm not going to be personally trading Forex or commodities this week because of just how when the markets are shut, etc. But there is potential for today and tomorrow for there to be a last bit of movement. Okay, good stuff. I'll be active in the Discord channel all the way throughout the day. If anyone has any questions, then feel free to jump in. I'm gonna just be now for the rest of today setting up some auto moderation in our Discord channel, and we're really gonna hit that hard next week, next year, which is next week. And yes, so we're gonna be building up that community in our channel. Okay, good stuff. All right, then, everybody. That will do for today. That's your breakdown of this week. Pretty, I wouldn't say a tame week. Let's see if we get that Santa Claus rally. Okay, take care, trade well, and I'll see you soon.